Don't spend your money on material things, invest it. Okay, how?
As you can probably imagine, we get this question a lot. But instead of just telling you that you need to invest, we're finally going to answer the question, how do you actually invest? Before we answer that, we need to actually go over what investing really is. Investing is simple. You buy something today, and in the future, you hope that it increases in value. So for instance, stocks, bonds, real estate, and commodities are all investments because those markets tend to go up over time. On the flip side though, if it's not an investment, we tend to consider those things liabilities. Liabilities are simply just things that are not going to return their investment over time. So for example, cars, clothes, food, electronics, the list literally goes on, are all considered liabilities because they're going to lose value over time. And just like any rule, there are certainly exceptions to this, like certain cars and clothes may actually gain value over time. But for the most part, these things lose value. The thing to understand here is that not all liabilities are bad, like cars get us to work and food literally keeps us alive. But we need a certain amount of liabilities in our life, but if you actually want to grow your money, you need more assets or investments than liabilities. But we'll talk more on that another time. Okay, back to investing. Like I said, so investing is buying something today and hoping that it gains value over time. If an investment does gain value over time, that's what's called appreciation. For instance, if you bought something for $5 and tomorrow it's worth $10, you gained $5 in appreciation. This is how investing works, because when you buy a certain investment, you hope that its value appreciates over time so that you can eventually sell that asset and make a profit. Okay, so here's how to actually invest your money. Number 1, invest your money in the stock market. You buy a stock, you're basically just buying a partial share of ownership in a company. That means if you go to the New York Stock Exchange and you purchase 1 share of Apple, you're technically an owner of Apple. And you don't actually get to manage Apple or make any decisions on their behalf, but you are a technical partial owner on paper. Essentially what that means is you give the company money so that they can operate, and in exchange, they give you partial ownership of the company. If you don't want to invest in a single company at one time, you can invest in what's called index funds or ETFs. These are groups of funds that basically just mimic certain markets on the New York Stock Exchange like the Dow or the S&P 500. Benefits to investing in stocks is that it's easy and super accessible to everyone. All you need is a brokerage account, which is basically just something that connects you to the companies on Wall Street, and an internet connection. And as more people invest and the price of a stock rises, the shares you own will appreciate in value, which means you can sell those shares down the road and make a profit. Second way to invest is through real estate. Real estate investing is a little more complicated, but it works on the same premise. With real estate investing, you own something tangible, like a plot of land, a single family home, or an apartment complex. Your gold real estate investing is the same. You want to try to buy the property at one price and then sell it at a higher price down the road. Or you could have somebody rent the property, which means they'll live in it and not you, and actually get passive income from that. Passive income simply means that you bought an investment and it's generating you income without you really having to do much. People will live in this property and pay you. That's passive income. You can also invest in commodities like gold, silver, and energy with the same goal. You want to make money from these investments. So yeah, liabilities are a part of life, but so is investing. And if you want to build wealth, you'll